With just 5,000 rupees or $60, you too can get started in the magical world of Forex trading. And there, it is truly amazing. Leverages of 5x, 10x, 100x, even 1000x are provided, funded accounts and whatnot. And these ads are everywhere today. Even if you open TradingView to do your normal stock market analysis or stock chart reading, there also you have these ads of funded accounts being run. So the dream is really nice. If you have the stock market skills, if you have the trading skills, you too can get started in Forex trading, where the ROI or the returns that you can make is much higher. So this deadly combo of low minimum investment and high ROI brings a lot of people into the world of Forex trading. So in this video, first we'll break down what exactly is Forex trading. Then we'll get into, is it as good as it sounds? Then we'll also look into which are the platforms through which you can get started. And then we'll go into legality. Is it legal in India? There is a lot of confusion and back and forth here. We'll also get into what are the risks involved. And after all of this, you can make the decision for yourself if you want to get started into this space, right? If you want to get into this world of Forex trading out there. Let's discuss about the A to Z of Forex trading in a very detailed and practical way that will benefit you. So if that is the case, what are you waiting for? Let's get started. The name is Ajay Ajith. Welcome to MarketFeed. Now that you're getting started with the video, I want to make clear that there are some very strong opinions that I'll be giving about Forex trading, and most of it is coming towards the second half of the video. So I want you to make sure that you watch the entire video before taking any decisions. Let's start with what exactly is Forex trading, and for that we'll first look into what is share trading in the Indian stock market. For share trading, you're buying and selling shares of a particular company, right? And as per the company's performance and buying and selling demand, the prices of the company go up and down. Similarly, in Forex trading, you're betting on the currency of countries. So if you believe that the currency's price will go up, you can take a bet on that, you can go long. And if you believe that the currency's value will fall, you can take a short trade there. But then the next question is, you are able to visualize how the share prices of a company might move. But how do the currency prices move across the world? So for that, there are few factors which affect the currency price movements. The first and the foremost, as always, can be demand and supply. But underneath all the demand and supply, there are a lot of economic factors that you should look into, like interest data, other economic data like the growth numbers of the country. You also should look at geopolitical tensions, what is happening in the country with its neighbors, all of that. So largely it can be put into the same bucket, supply and demand and technical factors on one side, and on another side, fundamental factors like the country's growth, its geopolitical situation, and all the economic data coming into the fundamental analysis bucket. Now you understood what is Forex trading. You also understood why Forex prices or currency prices fluctuate. But then let's get into the next part, which is how can Forex trading be done? So here, one important thing that you have to understand is that currencies are always traded as pairs. You can't just take a bet on USD alone. You always have to bet on a pair. You always have a comparison there. What does that mean? You can't simply say that the rupee's value is going up or down. It is always compared with the US dollar in the Indian case, right? Rupee is always compared. If rupee is falling, it is always compared to the dollar. If rupee is appreciating, again, it is always compared to the dollar. Few of the most popular currency pairs across the world are Euro USD, USD Japanese yen, as well as British pound versus USD. And if you're taking the currency pair that is USD INR, USD is known as a base currency and INR is known as a quote currency. So USD INR means that how many Indian rupees is needed for purchasing $1. And inversely, if you're looking at INR USD, you're looking at how many dollars are required for purchasing 1 Indian rupee. This is a list of the most popular 10 currency pairs from across the world. These are the most liquid and hence the most popular. You can see that INR is not even in the picture. We'll get to that. So if that is clear, what is Forex trading, how it works, and everything you need to know about currency pairs, let's get into the next segment, which is what exactly attracts a lot of people into this world of Forex trading. Here we'll discuss 5 major advantages, and just giving a disclaimer here again, these are the quoted advantages. That means these are the reasons why people are supposedly attracted to Forex trading. But again, not all of them are true. So let's go ahead with 5 major advantages that people talk about. And the first one is obviously leverage. So if you're someone who is trading with, let's say, 5,000 to 10,000 rupee capital, you'll even get a 100x leverage when you're trading in the Forex markets. That is, 100x means you can take trades up to 10 lakh rupees with just 10,000 rupees in your bank account. Imagine the situation. If you make a profit, you'll make a lot of money. If you make a loss, you'll only lose that 5,000 or 10,000 rupees. And that is the first advantage that is being sold to people. Now, the second advantage is that the Forex markets are open 24/7. So in the Indian stock market, it is open from 9:15 a.m. to 3:30 p.m. This is mostly the time when people are either studying or working. But in the Forex market, it is 24/7. You can get done with your office, you can come home, then you can trade, then you can make money. Then the third advantage is connected to the second one, which says that since the Forex markets are open 24/7, there are no gap ups or gap downs. And if you're trading in a very liquid currency pair, you also have the added advantage of just price action moving all the charts. If you're a good price action trader, you can make sure that you can trade very smoothly without any freak trades or any gap ups or gap downs. The fourth advantage is no price manipulation. So in the Indian stock market, if you're trading in Nifty or Bank Nifty, it is said that you can buy a lot of shares of Reliance. FIAs will do that to control movements of the market. But in the Forex market, it is trading happens with trillions of dollars. So you can't do the same. That price manipulation angle is not there in the Forex market. Again, this is what is being said. We'll get to the next part where we'll try to debunk all of these advantages. And the last advantage is the concept of funded accounts. So these brokers, they offer funded accounts or trading challenges where if you're able to make a lot of profits, they'll give you the capital to trade. And this is a major selling point across all major Forex traders. So if you get this funded account and you can technically make any profits that you want, you're just paying a commission to the broker or the platform, and all the rest you can keep for yourself. And that is also a major supposed advantage, or let's say a major pulling factor for you to come into Forex trading. Now let's list down all the advantages that we discuss here, and we'll go through them one by one and see why most of them are not applicable in India. So the first point that we discussed earlier was a very high leverage that is being offered. But in India, legally across all platforms, there is no leverage being offered for futures and options of currency. Then the next point is that Forex markets are open 24/7. But in India, the currency market or the Forex market is only open between 9 a.m. and 5 p.m. And if you're trading in cross currency pairs, it is between 9 a.m. and 7:30 p.m. Then let's also get into the most important part here. In India, it is legal only to trade in 7 very specific currency pairs. And out of that, 4 are INR currency pairs. That means these are currency pairs being compared to INR. And there are 3 cross currency pairs available as well. But as far as I can understand, no major platforms currently allow trading in them. So the only 4 tradable INR pairs that we found are USD INR, Euro INR, Japan Yen INR, as well as Great Britain Pound compared to the INR. These are the only tradable Forex pairs, at least right now, that we found in India. If you're looking to trade any other currency pair, it is illegal under the Foreign Exchange Management Act, which is a FEMA Act. You can be charged a daily fine of 10,000 rupees as well as jail time without any bail. And because of all these limitations, the liquidity is also lesser, causing a lot of price manipulation. So again, if you remember all our points here, most of them have been taken away. Right? Most of them have been taken away because in India, the only legal way to trade is through these listed 7 currency pairs, and only within very dedicated platforms which are open from 9 a.m. to 7:30 p.m. at max. Just like all the option trading regulations you have seen coming in the Indian stock market, similarly a lot of regulations have been put by RBI on the Forex market, making it not very robust, at least for someone, an Indian trading from inside India. Now, this is a situation inside India. You'll see that a lot of the advantages we discussed earlier practically do not exist. But it is not the same across the world. Across the world, Forex trading is a very robust way of trading currencies and making legitimate money. And all these foreign platforms have started infiltrating into the Indian trading ecosystem. So let's look at how Forex trading is being done across the world. Forex trading is very popular in the US, UK, UAE and many other markets, and they mostly operate under the contract for differences model. That is a CFD model. In CFD trading, just like our derivative contracts, when prices go up, you can go ahead and buy. When prices go down, you can go ahead and sell. And in both cases, you can make money. But in the Indian context, it is always a derivative. A future and option are always derivatives that you're trading. That means there is an underlying, and whatever FNO that you're trading are derivatives of this underlying. But in CFD, that does not exist. You're just plainly trading on the price movements. There is no underlying that is giving value to the CFD here. Price movements happen purely because of demand and supply. Again, CFD is a very huge topic. Let's not get into that for the sake of this video. We'll discuss that very separately if you're interested. But the only thing that you have to understand is that in the CFD model, brokers often act as their own exchanges. So in India, let's say you're trading in Zerodha. So you're trading in Zerodha and there's an underlying exchange or exchange where the trades are being placed. But in the CFD model, the brokers themselves are the exchanges. They'll connect buyers as well as sellers. They'll place trades on your behalf and they'll connect you both and the trade is completed. And with the CFD model, there are a lot of brokers in India. As we said in the beginning of the video, they have put advertisements all across the place for you to get started with this world of Forex trading. Then everything looks so nice, right? What is wrong with it? It's an amazing product which can be traded from across the world 24/7. You don't need to rely on Indian brokers. You can just trade with the CFD brokers from across the border. But that's where the problems start to get much more serious. You might think that you can start trading in the CFD brokers without any issues. But the first thing that you have to understand is the legalities. CFD is technically banned in India. It is not allowed. So any trade which is happening without an underlying is banned in India. It is purely not allowed. RBI has placed XNS, MetaTrader and a lot of Forex trading firms under their banned list. Some might say, oh, this broker is not in the RBI banned list, or that you can use VPN to trade, but understand that all of that is illegal. Any form of trading which does not have an underlying is illegal in India, and by definition CFD automatically becomes illegal. But again, I know a lot of people will forgive this and decide to move ahead. Hey, I can do this, that, and I can make it work. I can go to the UAE, I can start trading and I can do whatever, right? That's where the next few problems are getting a bit more serious. CFD platforms have come under heavy scrutiny multiple times for taking opposite trade of retailers. So here in this situation, they know that most retailers will make losses and they often end up betting against them. And they also do manipulation in hundreds of ways, which is manipulating the price because they are the exchange themselves. Because they've taken a counter order against you, they'll manipulate the price, they'll show your chart as different. A lot of things have been alleged against them. Now again, the first point you're okay with. The second point, you found a really good broker which is based in the US, which does not involve in any of these activities. But then the next problem comes in, which is you can't escape the fact that these are all banned apps, and hence you're sending the money to some random account. In India, if you want to put money into Zerodha and trade, you transfer money directly to Zerodha. It will show up in your Zerodha trading account and you can start trading. But in Forex, you can't do the same. You have to send your money to some random person, let's say in Gujarat or Arunachal Pradesh or somewhere across the country, and you'll immediately see your Forex trading account getting funded. But who is that person you just send money to? What will you say to your CA on who you send that money to? Similarly, when you're trying to take a payout, the money will come from somewhere else. It's all sort of Hawala trades or Hawala transactions which is going on. And in that case, in the very slim case that whoever you're sending money to or whoever you're receiving money from, they are a shady individual or a shady organization. Imagine the kind of trouble you will be in. And let's say again, people are willing to take that risk. Then comes the last and major nail in the coffin, according to me, which is brokers just closing, shutting down and running away with all the clients' money. Because all of these brokers and platforms are registered in tax haven states where the regulations around financial products and financial instruments are very less, they can just take your money and run away. And through all the shell companies, they'll reroute the money and make sure they benefit and that you lose your money. And I feel this is the end of the discussion for Forex trading in India. So, there are very legitimate ways to do forex trading in India. You can trade it in Zerodha. There are currency pairs being available. They have all the disadvantages that we talked about, which is only limited number of pairs, limited number of time or hours of trading available, as well as low liquidity. But I would say still that is much better than going into this very shady world of forex trading. I know you'll be seeing a lot of YouTube videos, especially with the new options trading regulations that have come in, saying options trading is dead, forex trading is the way to go. But again, make sure you know this fact that it is absolutely illegal and it is very risky to do, right? Again, if you want to get into forex trading, there is this very legitimate way here, right? Through all the registered brokers in India, you can trade forex. But if you still want to go with the other way, then the only thing that I can say to you is let God be there to help you and protect you from all these supposed scams that I was talking about. Now I know a lot of people will start attacking me in the comments saying, hey, I made so much money from forex. What are you saying? You haven't even tried it. And there are millions of people who are making money from this very legitimate way of trading. Now I know it's a very sensitive subject and there are huge mafias going on behind the scenes to promote forex trading platforms in India. I'm taking this risk and telling you very honestly, you won't find many videos on YouTube, but please make sure that you're not falling for this trap and you only go with the legitimate way of making money. So that's it for the video, guys. Leave a like if you enjoyed the video. Let me know all of your thoughts in the comment section down below. And if any of your friends or family are interested in forex trading, make sure you send this video across to them as well. This is Ajay Ajith signing off. See you all again in another video. Bye bye.